All right, guys. So welcome to day three of the Forex Beginners Workshop, powered by Tentrade. My name is Toby Okunuga, and I'm super excited to facilitate this beginners bootcamp. All right. So this is day three. We've been having an amazing time exploring Forex from the basics. Day one, day two. Today is day three. And day three is going to be very, very interesting. We'll be talking about some very, very important concepts. And then possibly tomorrow as well, which is the final day. We might not have much to do tomorrow, but basically tomorrow, I'd like to use tomorrow to clarify a few concepts for you guys. Possibly it's going to be a Q&A session, or we learn some things tomorrow. So today is going to be power-packed. Power-packed, all right? So without further ado, let's go into the first concept of the day. So yesterday, remember, we started talking about market structure yesterday, okay? And then for the sake of our level as beginners, I only want to talk about two aspects of market structure so that we don't overload ourselves with information. So the first aspect that we talked about yesterday, we talked about support and resistance. And then we learned about what it is, simply it's support and resistance are areas of reversals in the market, reversal zones in the market. And then why are we learning how to use support and resistance? We are using historical data to predict what will happen in the future. And then the other aspect of market structure is trends. So the first thing that we'll talk about this evening is the concept of trends. Since we've already discussed about support and resistance, trends is the next thing that we should do today, okay? So, and it's a very, very easy to understand concept. So once we discuss it, we'll now also talk about application, how to spot it on the website, all right? So there are two kinds of direction in which price moves. Okay, so it is either price is going up. So when price is going up, like so, we say price is bullish. Okay, when price is going down, like so, we say price is bearish. All right, so we have bullish move or a bullish environment. When the market is going up, we say the price is bullish. When it is going down, okay, we say the market is bearish. So because that's how the market operates. It is either price is going up or price is going down. Now, our understanding of this movement of the market made us break it down into something easy to understand, right? So there are two types of trends, okay? We have what we call the uptrend. Number one is the uptrend. And then number two is the downtrend. So an uptrend is an environment whereby price is bullish. An uptrend is a bullish market when price is going up, right? An uptrend is a bullish market. Meanwhile, a downtrend is a bearish market. Bearish. Okay. So these are the two major trends that you need to learn as a foreign exchange trader. the forex trader. Okay, when price is bullish, we say that it is in an uptrend. When price or the market is bearish, we say that it is in a downtrend. Okay, and then why do we want to know, why are we spotting an uptrend or a downtrend? Okay, we'll talk about that after a few things. Now, let me really show you how an uptrend and a downtrend looks like. Now, when price is going up, price does not go up in a straight line like so. No, you never see price go up in a straight line. The structure of an uptrend looks like this. Price moves in a zigzag format, something like this. Okay, this is how price goes when it's an uptrend. Okay, it goes like this. For a downtrend, it's also zigzag. It's going down. Okay, so zigzag like so. Okay, this is how price moves in an uptrend, like so. It goes up in this manner. Now, of course, it might not always be like this. Is the textbook, this is the ideal structure of the market when it is in an uptrend, like so. But there are times that it might not be as smooth as this. Okay, so this is the ideal market scenario for an uptrend. This is the ideal market scenario for a downtrend. All right, now there are times that the real life scenario of an uptrend might be something like this. Let me just give you a very might be something like this. All right, but ultimately, when you understand market structure, which you will go deep into what a trend is shortly, but you see that ultimately these are the reversal points that we have here, which is giving us the uptrend. All right, so the same thing works for a downtrend. I'm just going to draw it again, not to confuse us. This is how an uptrend looks like. An ideal market of an uptrend will look like this. And an ideal market for a downtrend is going to look like this. Okay, so let's go a bit deeper into the concept of trends. What exactly does this move tell us? What is the meaning of each of these moves? All right, so a trend is made up of three components. So let's start with an uptrend. This is an uptrend, how an uptrend looks like. Okay. A trend is made up of three components. Now, the first move, this first move here, hold on a second. This first move that's going up here, let's do it this way. Here. So the first move in a trend is called an impulse move. All right, so this is an impulse move. We call it an impulse. Okay, and then the second move in a trend is called the move downward. It's called a correction. It's called a correction, a corrective move, or some people will call it retracement, or some will call it a pullback. Okay, but ideally it's correction anyways, because it's a corrective move. All right. And then the last move in a trend is another impulse move. All right. So a trend is made up of impulse move, a correction, and then an impulse. All right. So if this trend will continue, we'll see something like this. We'll see another correction, then another impulse. We'll see another correction, like so, another impulse. Okay. So this is what makes up a trend. Okay. A trend is a combination of impulse moves, corrections, and another impulse, like so. All right. So this is how you identify a trend. All right. Now let's do the flip for a sell for a downtrend. So for a downtrend, the same thing. We have the impulse move, you have the correction, and then you have another impulse move. Okay. If that trend will continue, you have another correction and then impulse. All right. So you are combining corrections and impulse. So as long as you keep having impulse moves and correction moves, right, the trend is going to continue. Now let's go a bit further to dissect a trend. So now we know what an impulse move is: correction, impulse, correction, and impulse. So let us label all of the reversal points on this trend. This is an uptrend, all right? So the first point over here in an uptrend is called a higher low. Okay. HL. It's called a higher low. That's the first point of an uptrend. It's called a higher low. Okay, and then the second point over here at the top is called a higher high. It's called a higher high, like so. Okay, and then at this correction over here, this is another higher low. This is higher low, higher high, higher high, like so. Okay, so an uptrend is made up of higher lows and higher highs. So price moves from higher lows to higher highs to higher lows and then to higher highs. How do you know that price is in an uptrend and price will continue, is continuing in that uptrend? You will know through the higher highs. As long as new higher highs is being created, that means price is still in an uptrend. If we still have new higher highs being created, price is in an uptrend. So we might have something like this. So another corrective move to form a higher low. And then if price should go above this higher high, like so, right? That means the uptrend is still in play. Okay. So you must know and learn the concept of higher lows and higher highs, because these are terminologies that will be using in our trading journey. You need to be able to figure out market trends, right? And one way to easily spot market trend is when you understand the concept of higher lows, higher highs, higher lows, and higher highs. They are simply reversal areas in a trend. Okay. Remember, we've discussed about the corrective moves and then the impulse moves, right? Good. So let's go to to the downtrend. How does a downtrend look like? You have impulse move, correction, impulse, correction, impulse. The first point in a downtrend, right, is called lower high. It's just a flip of the uptrend. Lower high, LH. So price moves from lower highs to over here, lower low. Please write these things down and jot it down in your notes so that you don't forget. Lower low, LL, and then another lower low, like so. Lower low, lower high, lower high, lower high. Okay, so price moves from lower highs to lower low, lower highs to lower low. Okay, that is the makeup of a downtrend. How do you know that price wants to continue in a downtrend? Is if price keeps printing new lower low. All of these movements are movements of price, is movements of the candlesticks, right? So how do you know that price wants to continue in a downtrend? If you see price do a correction and then you see that the candlestick is still going below the previous lower low. Once a new lower low is created, that is a signal that price is still very much in a downtrend. Okay, good. So now that you know the different components of a trend, you know the genetic makeup of a trend, right? On the lowest level, impulse moves. The trend is made up of impulse, correction, and impulse. And breaking it down, we broke it down for an uptrend. It's made up of higher lows and higher highs. For a downtrend, it's made up of lower lows and lower highs. Okay, so what is the essence of teaching, of knowing about lower highs and lower lows, uptrend and downtrend? It is because we want to know the ideal points to be buying or selling in the market. Okay, so it is recommended that when you spot that price, if price is in an uptrend, or let's say if the market is in an uptrend, or can use uptrend or bullish interchangeably, okay, it is recommended to look for buy opportunities. Okay, when you spot that price is in an uptrend, it is recommended that you want to be looking for opportunity to buy in an uptrend. Okay, you can see sell opportunities in an uptrend, but it is a very risky trade to be in because the momentum is not bearish. In a bullish market, which is not in an uptrend, the momentum is bullish. Okay, so that means there's strength in that particular pair. So if you are selling, you are placing a very huge and risky bet. So it is recommended, it is safe that when you spot that price is in an uptrend, when the market is bullish, you want to look for buy opportunities. Okay. Likewise, when the market is bearish, what do? If the market is in a downtrend, when the market is in a downtrend, which is bearish. Bearish. You want to look for what? Sell opportunities. So in an uptrend, you look for buy opportunities. In a downtrend, you look for sell opportunities, which begs the question. So at what point do you buy in an uptrend, and at what point do you sell in a downtrend? We want to go back to our understanding of the genetic makeup of trends. In a downtrend, the places where you want to be looking for sell opportunity is at the lower high. So at the lower high is where you want to be looking for sell opportunities. So you sell at lower high. All right. You sell at lower high. Now, as you can see, in an uptrend, in a downtrend, there's opportunity to buy over here. Of course, price will go up here, but it is risky to buy. You'll be in a lot of false trades. All right. It is safer when you spot that price is in a downtrend. You want to wait for correction to form a lower high. So once a lower high forms, you want to sell at lower high. Okay, I'm going somewhere. Because you now ask me a question. How do you know where the lower high is going to end? Right? So that you can sell. We are going to get there. Okay, but right now, I'm taking it step by step. As you have noticed, I don't want you to miss any important point. In a downtrend, you want to sell at lower high. Meanwhile, in an uptrend, you want to buy at the higher lows. So at the higher lows is where you want to look for buy opportunities. Please, if you understand what I've said so far, please type in yes in the chat box if you are with me. If you need more clarifications, type in clarify in the chat box. Or if you understand what I've said so far, type in yes in the chat box. Abel said yes, yes. Okay. Can I also said yes? Perfect. Okay. Can I get more responses? Thank you, Favor. Israel, thank you. Awesome. So I'll do yes. Good, good. Andrew, yes. All right. So I'm glad that you get that following. Now, if you understand that you should buy in an uptrend, and then you should buy at higher low in an uptrend, and then you should sell at where? Lower high in a downtrend. How do you now know lower highs and higher low? Okay. How do you know that price has gotten to higher low? Okay, how do you know the end, where the higher low is going to end before you buy? How do you know where the lower high is going to end before you sell? Now we are going to tie our knowledge of what we learned yesterday. Remember yesterday we learned about support and resistance. And then we said that support is a reversal area in the market that acts as a floor. Let me just put it down. A support is an area of the market that acts as a floor. Okay, it's a reversal zone in the market. Okay. Meanwhile, a resistance is an area, is a reversal zone in the market that acts as a ceiling Okay, it rejects price. When price is going up, when it gets a resistance zone, you see a reversal. Okay, so now we are going to combine our knowledge of support and resistance. So we are going to merge that knowledge into what we know about uptrends. Okay, now let's take it a bit further. Don't mind chart to be too clumsy. Hold on. So this is a downtrend. And then we've already established that in a downtrend, we want to look for sells. And then we are looking for sells at lower highs. Now, the question now is, how do you know a lower high? How do you spot a lower high? Because how do you know the zone to start selling from in a lower high? So, very, very simple answer to that. In a downtrend, you want to sell at a resistance. Okay, you want to sell at a resistance. So your lower high is going to be congruent or in tandem with a resistance zone. So over here now, for price to drop, there'll be a resistance zone somewhere around here. Okay, so this would be a resistance. There'll be a resistance zone somewhere here. So it is at that resistance zone. Okay, it also aligns with the lower high because price has retraced. So you want price to retrace into a resistance zone. And then what do we know about resistance zone? When yesterday we said at least 2 touches validates a resistance zone. So when you see that a resistance zone has been validated more than once, okay, the next time that price gets into that resistance, you now want to look for sell opportunities. Okay, so likewise, a lower high is going to end at the resistance zone all the time. Okay, so let me make this easy for you. Just write it down, even if you don't really understand what I've said so far. Write this down. So let me write this down, okay, for you. Let's do it this way. So we sell in a downtrend. In a downtrend, we sell at resistance. Okay. In a downtrend, we sell at resistance, which signifies the end of the correction or the end of the lower high. Okay, so in a downtrend, we sell at resistance, and that resistance, let's put a comma there. That resistance signifies the end of the correction. Remember, a downtrend is made up of impulse, correction, and impulse. So this is the correction I'm talking about over here. This is the correction. This move here is a corrective move. All right. This move is a corrective move. This move is a corrective move. It's a correction. All right. So in a downtrend, we sell at resistance. which signifies the end of the correction. So in a downtrend, you want to wait for price to correct itself first, and then you want that correction to align at a resistance zone, to get to a resistance zone before you start looking for sell opportunity, because we've established yesterday that we sell at resistance. Okay, so if you are in yesterday's class, we looked at the charts and then we saw how price was reacting to resistance. So now we want to add more value into the context of resistance. Okay, because a resistance, you are only concerned with resistance you find in a downtrend, and then you sell at that resistance, because there are times that you might find resistance even in an uptrend, but you want to sell at resistance that is in a downtrend. Okay. Likewise, in an uptrend, we want to buy at support. Okay, so over here we align with a support. To be a support zone. Okay, so in an uptrend, we want to buy at support. Let me bring that here as well. In an uptrend, we buy at support. We buy at support, which signifies the end of the correction, in this case, higher low. So that means when price is in an uptrend, you always want to wait for price to correct into a higher low before you look for buy opportunities. When price is in an uptrend, like so let's say you see price going up, like so, and then you've already established that price is in an uptrend. So let's say at the point that you went into the chart, price was here. You've already seen that price is in an uptrend, but price is over here. We don't buy here because this is not a low point in the market. If you want to buy, into an area of support. Once price corrects into an area of support, all right, guys, we're back. Okay, so let's continue our discussion. So let me step back for a bit and let's do this again. So let's say you found price in an uptrend. So price was here. So the moment you entered the market, you saw the charts, price was here. It was very, very clear to you that price is bullish, that you are in a bullish environment. And what do we do in a bullish environment in an uptrend? We buy, right? But we just don't buy at any place. The right place to buy is at higher low. So if you see that price is at this point, what you want to wait for as a smart forex trader is to wait for price to correct, wait for the correction. Okay, so you have to be patient to get the best trade. You wait for a correction, and that correction, you want it to get into a support. You want price to correct into a support, okay, which might possibly align with, which might possibly be your higher low. Once price corrects into a support, that is when you now want to look for buy opportunities. So when all of this happens, you buy here, and then possibly that move might create a new high. If you always pick trades like this, you'll find out that you win more trades than you lose, because you are buying with the trend. You are trading with the trend of the market. You are not trading against the trend. Okay, so we buy at support. In an uptrend, we buy at support, which signifies the end of the correction. Okay, on the flip side as well, I'll just show you that again. For a downtrend, let's say you are, when you enter the market, price was like this. Okay, price is in a downtrend, very, very clear downtrend. And in a downtrend, what do we do in a downtrend? We sell, right? But you will not just click on sell on your MT5 and then keep selling. No, if you sell here, you are selling at a very, very wrong price. The chances of price retracing against you is very, very high. And then your stop loss will be taken out easily. Okay, so what do you want to do when you see that price is in a downtrend? You want to wait for the correction. Wait for price to correct, wait for a correction, and that correction, you want it to align into a resistance. Okay, so when price makes a correction into a resistance, you want to look for sell opportunities. So, oops. Okay, so over here is where you look for sells, which would be your lower high in this case. Is that clear, guys? Give me some feedback in the chat box if that is clear to you. Okay, I'm trying my possible best not to rush it, because I want you to understand. As you can see, I'm really picking my words. I'm not rushing. So give me some feedback and let me know if you understand what has been discussed so far. Clear, can I say clear? Favor. Awesome, good. So now let us go into the chart and then identify uptrends and downtrends. Now, what I need you to do now, so let me backtrack a bit. Yesterday that we talked about support and resistance, how many of us took the time to go to, because remember I gave us an assignment yesterday, and your assignment was to go to any currency pair, and then I want you to spot support and resistance zones and then mark it out on your chart. If you did the assignment yesterday, okay, please type in yes in the chat box. If you did the assignment, type in yes. Okay, because I also want to give us another assignment today. Okay, and your assignment for today is very, very simple. I want you to spot uptrends and downtrends in the market. Okay, that is what I want you to do. So you want to go to any currency pair at all on any time frame and then spot market trends. Spot the trend of the market. That's all I want you to do. So let that be your assignment. Okay. And the more you spend time on the charts, the better it's going to be for you. As much as TenTrade can provide you education and resources, you cannot overlook screen time. Nobody can take away that from you. You have to invest time on the charts. Okay, it's like somebody that, remember, I like to compare Forex traders to traders in the market a whole lot, because your normal orange seller in the market is also a trader. They're also doing the same thing, buying and selling. We are also doing buying and selling, but now we are trading commodities. Our own commodity is currencies. So how will a tomato seller make money if she's not in the market? Okay, she might have tomato in her house. Maybe just a few people might know that she sells tomato at home, but she will make a lot more sales if she's in the market. Likewise, you as a Forex trader, you will have a better understanding of the market when you spend time on the charts. That is when everything will start making sense to you, because trust me, Forex trading can be very, very boring, especially when you're just staring at these green and red candles. For most people, it might take you several days or several weeks to understand what the hell is going on here. All right. But you can cut short that time frame by the amount of time that you spend on the chart. Let me give you a random example of what you should do. For the next 1 month, your weekends, devote it to looking at the chart. I know that most of us here might be busy Monday to Friday, you have work, right? But you don't have any excuse during the weekend. Saturday and Sunday, let it be for the chart. Okay, everything that we've been learning, that you've learned, you want to go on the charts and then try it out. And then most importantly, I do not want us to rush. As you see me do, I'm not rushing any concept, because majority of people that are trading Forex, especially beginners, we quickly want to jump into making money. And I understand that, because we are Nigerians. We have a lot of bills to pay. Now there's not even Naira anywhere, but you still want to make money. Okay, you have bills to pay. School fees is there, rent is there, prices of food is expensive, fuel is ×3. You have to buy fuel and on gen this night, or like, so you need money. So an average person wants to double their capital in the next 1 week or next 1 month. I get that, but I want to advise you, don't do that, because if you rush, the same way you rush to start trading live is the same way you rush out of Forex, and then you start calling Forex a scam. Okay, I'm saying this because I've been there before. I've lost so much money that most of you, if you lose that money, I'm not sure you'll be sane. All right. So personally, I'm speaking from experience. You don't want to rush into this market called Forex. And that is why when we're talking about day one, when we're talking about Forex market participants, we spoke about hedge funds, about commercial banks, about central banks. Everybody that is a market participant are trading in the foreign exchange market to make money. The same way you want to make money in the forex market, it's the same way other people want to make money in the forex market. If you place a trade today and then you make a profit, that money did not come from heaven. That money came from somebody else's pocket. So you're making a profit because somebody else has made a loss. All right. So, and then I made you realize that hedge funds, all those big banks, they have teams of specialized analysts. So you are competing against very, very intelligent and well-equipped people. So if you don't know what you are doing, you find out that you are losing money consistently. That is why you want to take your time. Don't jump the process, follow due process. Don't be in a hurry to make money. Let me add, without mincing words, if you are a beginner, if you've not started trading live at all, I recommend, this is my recommendation, please don't think about trading live until, let's say, 2 or 3 months. Devote your first 3 months to having a proper understanding of the market and practice like no man's business. Okay, so once you practice and then you are repeatedly profitable, you are consistently profitable, then you have what it takes to trade in a live environment. Okay, that's my humble recommendation. So I'll try not to rush anything because I don't want to give you, I try to balance my training, not to only give you the good side of Forex, you also need to be aware of the bad side as well. Most people that trade Forex are not making money. Okay, if you take 10 people, if you take 10 random Forex traders and put them in a room, fund their accounts with a lot of money, and let them trade for 1 month to 2 months, you'll be shocked that those people that you see on social media that claim that they can trade, lock them in one room, fund their accounts. You find out that maybe just 1 or 2 people will be profitable. The majority will lose money. All right. So please take your time. Don't be, most of you are going to be already even going on social media now. So you are seeing a lot of Forex traders that are flashy online. There are people that are showing their results, that are making money, a lot of money per trade. It's fine, but they did not get there in 1 day or in 2 months, right? So don't try and earn what someone that has paid the dues for several years is earning. You that have just gotten started, don't try and make money that other people are making now. So focus on your own journey. Okay, have a proper understanding of the market before you start trading live. Okay, so let us identify a trend real quick in the market before I start preaching. Okay, so using the candlestick, I'm going to start from here. All right, so let's use the arrow. So looking at this, guys, let me start from here actually, because it ties everything together. So downtrend, you can see price, impulse. Oops. You have impulse, correction. You can see it, right? Impulse, correction, impulse, correction, impulse, correction, impulse. All right. So we've identified a downtrend. So that means for price, so price moves from downtrend to uptrend, from uptrend to downtrend. Okay. So let me quickly show something before I discuss this Now, talking about how price moves from an uptrend to a downtrend. So this is an uptrend, right? For price to switch trends, that means structure has to be broken. All of these are structure, right? This is a higher low, right? Remember, higher low. Okay, all of these are higher lows. Okay, and then we have higher highs here. All right, for price to shift from an uptrend to a downtrend, in the case of this, for an uptrend like so, right? If price wants to move, change trend from uptrend to downtrend, that means structure has to be broken. And the closest structure to where price is, which is here right now, is this higher low here. All right, so we will say that price has shifted from uptrend to downtrend when price breaks this higher low. So you want price to do this. Once price breaks this higher low, like so, once price corrects and gives us a lower low, now we'll say that price has shifted. So let's label all this properly. So this is now our lower high. Remember our nomenclature, lower high. Oops. Lower low. Lower low. So it is when this happens that we say that price has shifted from an uptrend to a downtrend. On the flip side, when price wants to shift, so we can have this continue like so, correction, so, okay. On the flip side, oops, on the flip side, when price is shifting from a downtrend, impulse, correction, impulse, like so. Let us label it. This is our lower high. Okay. Lower high. This is our lower low. So how do you know that price wants to shift from a downtrend to an uptrend? Structure has to be taken out. All right, so that means for a downtrend to change to an uptrend, price has to break the immediate lower low, like so. Price will break this lower low, because this is a structure in that trend. Once the structure has been violated, like so, so we want price to break this, and then you want to see the correction and the impulse. Okay, so once we have that, you say that price has shifted from a downtrend to an uptrend. So this is your higher high. It's your higher low. Higher low. Okay, and then this is your higher high. And then price can continue in the uptrend by giving you another correction to create a new high, and that correction to create a new high, or price might switch trends again and go down. Okay, so that's why as we go along now, thankfully, at 10 Trade, like I said in the beginning of this webinar, we do weekly trainings. I mean, daily training, right? At least 3 to 4 times a week, we are having live trading sessions. And on these live trading sessions, we are also going to be teaching ourselves trading strategies, zones where we can take entry. So you'll be getting awesome perspective of the market from trading experts. So everything that you are learning in this beginners bootcamp is to help you understand what you'll be learning at those live sessions. All right. So as a matter of fact, I would not like to show us a trading strategy in this bootcamp series. And I know why, because I would like us to really understand these basic concepts properly. If I start teaching us trading strategies, I feel right now, because this is your day 3, if tomorrow is your day 4, most people might not be able to really understand the strategy if we rush it like that. All right. But eventually, as you join our live trading sessions, right, the market will start making sense to you. You'll be able to understand and learn trading strategy. Okay. So now I have to show us how price moves from an uptrend to a downtrend, because that scenario happened over here. All right. It happened over here. So as you can see, when this happened, we had a lower low here, and then price gave us a little bit of internal structure here. You can see. But ultimately, price did not create a lower low, because price did not break this low here. Okay, so all of this, we call it, this is an internal structure. For some people that don't understand how price changes from uptrend to downtrend, some people, if they are on this time frame, they might call this an uptrend, like so. Of course, it is the trend, but it's an internal structure. This is not an uptrend. All right. For price to shift from this downtrend to an uptrend, this higher low, this lower high rather, this one here, has to be taken out. So eventually price took it out. So when this happened, a correction and an impulse. Now we say that price is in an uptrend. Okay, and then that trend kept going up. Impulse, correction. Oops. Impulse, correction, impulse, correction, impulse, like so. All right. And then you can see over here, the trend changed a bit. So there's always going to be trend changes from time to time. Okay. So you can see it moved. So this higher low got broken. You can see the retracement. You can see the lower low. Okay. Ultimately, price shifted from this downtrend to an uptrend by taking out this high here. Okay, so price took out the high, impulse, correction, impulse. Okay, ultimately, you can see what price is doing. Price took out this low, this higher low, to switch, a possible switch. So ultimately, we had a break, like so. We had a retracement, but all of this did not suffice because price did not break this low. So eventually, price continued in that uptrend. That is what I was saying when I was trying to explain to you the ideal scenario of an uptrend and the real-time scenario of an uptrend. Okay, it's not every time that an uptrend will be like this textbook. This is like textbook format. Okay, of course it happens in the charts, but you won't see an uptrend like this every single time. There are times that it might be a bit messy, but if you understand the structure, higher lows, higher highs, lower lows, you can really decode exactly what is going on in the market. Why are we learning market structure? By market structure, support, resistance, and trends. It is because that is the first thing that you want to do when you take a look at any currency pair. Okay, when you go to the charts of any currency pair, before you start looking for places to buy or places to sell, the first thing you want to understand is what is the market structure. You want to first and foremost interpret what is going on with these candlesticks. What is the story? What is the message that this candlestick is trying to say? You can only understand that when you have a good grasp of market structure. So in essence, market structure is more like your foundations. If you don't understand market structure, you will get every other thing wrong. So please, I beg you, don't skip this process. You want to gain mastery of understanding market structure first, and you will only gain mastery of market structure when you spend a lot of time on the charts. Nobody can teach you how to understand it like staying on the screen. I've shown you how it looks like, but on your own, you will learn it when you go on the chart by yourself and then you see how everything is working out. That is how you understand it. Okay. Somebody said the highest form of education is what? Is self-education. All right. What we have done right now is to point you in the right direction, but you still have to educate yourself. And that is you spending time on the chat, on the chat. Okay. As I've noticed, I'm emphasizing it. Okay, because a lot of people don't spend the required time on the chat. We quickly want to skip the process and start making money. Okay, good. So your assignment again, gentlemen and ladies and gentlemen, please, thankfully, tomorrow is Friday. If you're busy next tomorrow is Saturday and Sunday. Please take the time and just go to any currency pair. And I need you to figure out the market structure. Just figure out the trend and then draw the trend with the arrow tool. Okay, draw trend. So you are just marking it out so that a time will come that you won't need to even start using arrows anymore. Once you look at the chart with your naked eye, you can see exactly what is going on the chart. Okay, that is when mastery comes into play. All right, you want to see how price is moving from uptrend to downtrend. And remember, you are learning uptrend and downtrend because you want to know the best zones to buy and sell. In a downtrend, you want to sell. In an uptrend, you want to buy. So if you get it wrong, if you didn't know that price is in an uptrend, and then you are looking to sell, you'll be losing trades. But when you are sure and certain that price is in an uptrend, you know what you're looking for in an uptrend. You are buying, you're looking for support zones to buy from. You're good to go. If you figure out that price is in a downtrend, right, you know that you should be selling. So you are sure what you're doing. And then you're looking for resistance zones to sell from in a downtrend. All right. When you put all of that together, all right, you'll be in profit most of the time. Are we together, guys? I know I've been rambling a bit, but I need to ramble. Is it ramble they call it, or rant? Because of experience. And because I've trained a whole lot of people, I know the way most beginners think. You need to understand what I'm saying so that you will last in the market. Okay, an average forex trader will blow an entire capital in their first 3 months. And that first 3 months is inclusive of when they start learning forex. So let's say somebody starts trading forex. This is February. Between February and May, an average trader would have funded an account with real money, and then they will have lost all the money within 3 months because they were not patient enough to really understand how to trade properly. Are we together, guys? Good. So let's spend the rest of today to show you how uptrend and downtrend aligns with support and resistance. All right. So let us spot an uptrend. Okay. Let's spot an uptrend, and then in an uptrend, we want to spot areas of support and resistance real quick. So let me just pick what is in front of me right here. So you can see price giving us this uptrend like so. Let's zoom into this. Okay, so we could have picked this impulse move. So let's assume that price was here. Let's do a replay here. Let me show you something. Okay, so this is price. Let's assume that this is where price is in real time. So this is an uptrend, right? In an uptrend, you're looking to buy at support. So when you see that price is in an uptrend, the next thing you want to start looking for is what? Is a support zone. It's a support zone. So here right now, you want to look for the most recent support. Just look to your left. Remember, support and resistance is simply using historical data to predict what will happen in the future, right? So over here right now, we want to identify support, okay? Which zone acted as a floor here? Which area or reversal can we find here is a support? And I'll recommend in marking out support zones, mark out the candle, the last sell candle before the buy move happened. So over here, we can see the reversal. So price came down and then we saw a reversal. Okay, so that means there's something responsible for that reversal, which is a support. Now, a support is not a line. It's not a line. It's not a price. It's not one line like this. No, it is a zone. So in marking out the zone, my recommendation is you want to mark out the last sell candle before the buy, before the reversal. Before the reversal happened, the last sell candle. In this case, it is this candle. So I'm going to take the whole of this candle as my support zone. I hope that makes sense. The whole of this candle as my support zone. So I'm going to draw it for like so. So if price is in this uptrend, and if price should retrace, so if price corrects into the support, it is here that I'll start looking for buy opportunities. So I'm going to buy, looking for buys here. Okay, that is if price corrects into the support. Okay, but price did not do that. Let's play it forward. So price did not do that. So price created a new high, isn't it? So that means you have to move forward. So a new high was created. You can see this little correction here, and then ultimately price came all the way up. So, and then guess what I'm going to do? The next thing is, when you see that price has done this, let me refresh this like so. So when price did this, gave us a higher high, this is an uptrend. Like I said, when you see that price is giving you a higher high, of course, it is an uptrend. You don't want to buy over here. You want to wait for a correction. Abi now. So that correction, you want it to align with the support. And over here, we can see reversal, a reversal here because price came down here and then went all the way up. So there's a support zone here. So how do you draw out the support zone? The last sell candle before the buy move started happening. In this case, this is the candle that I'm interested in. So that's the zone. So I'll take the whole candle all the way down. So the next time that price retraces into the zone, I want to look for buy opportunities because that is a higher low that I'm looking for. So I buy in hopes of going up. So let's play it forward and see what price did there. So wait carefully. Good. You can see that the next time price, so when price came into the zone, you can see what happened. That support zone worked. And then if you had entered here, you would have been in profit. You can see. Now I'm just showing you at random to let you know that what you've learned so far works. Is working and it's work for life. Okay. Let's put this forward. You can see what price did. Price picked up from this support. So if you had entered here, you would have been in massive profit. This is how people make money in the furniture market. And then you've learned a major secret in just 3 days. But now, like I said, let's take it step by step. Don't get too excited. You want to learn how to spot this by yourself first, and then you practice. Practice makes perfect. Okay, so price has created a new higher high, isn't it? So when price gives you a new higher high, what do you want to do? Price is still in an uptrend. So in an uptrend, you want to look for buy opportunities, and then you are buying in a support zone. All right. So this is a high uptrend high. So where is the closest area of support? Over here. This is a support zone. This is a support. So we want to draw out our support zone. So I'm interested in this last sell candle before the buy happened. So over here, I'll take this as my zone. Okay, this is support. So is price going to retrace into this zone and work for us? I don't know. Let's see. Let's play it forward. Good. So you can see price broke that support and actually he used this support. So like everything is still over here. So over here, let me erase this. As you can see, this is a corrective move before the buy. And then the last sell candle is this candlestick right here. All right, so that was all price respected. So if you have taken the move, good, that's it. And then you can see what price did. From that higher high, price retraced into the support. When price retraced into the support, you can see the buy started going up. Okay, it's not different from what I've just shown you. But the skill sets that you need to learn right now is learning how to spot the right zones. okay, as it is happening in real time. But there's no way you'll be able to spot it in real time if you don't know what has happened in the past. That's why I was talking about the importance of screen time. Again, let me reiterate, your next 3 weekends, please devote it to studying the charts. You have to study it. Forex trading is a career. Okay, it's a career. And anything that will make you money in this life requires some amount of effort and attention. Okay, it requires seriousness and attention. So if you want to make serious money from forex trading, then you must take it seriously. That's what long and short of it. You can see, so price reacted from the support, and then price kept going up like so. All right, so if you had used that concept that you learned and then you took entry somewhere here, right, you would have been in profit. All right, so for us to know that this uptrend is going to continue, then price needs to break this high. They can please above the high. So let's see if that happened. Let's do this. So let's play it forward and see what price did. Good, so we have a break. Okay, so I don't want to really confuse us with many caveats, emptors, but excuse me. When we are talking about, so let's pause this for a while. Let me show you the schematic. So this is an uptrend, impulse, correction, impulse. This is an uptrend, right? Impulse. So for us to know that price is still in a bullish environment, price needs to break the previous high to create a higher high, right? Now, the kind of break that personally I look for, or I recommend that I look for, is you want price to break this zone and you want the body of the candle to close above this zone. So I'm saying something like this. So that the body of the candle, this bullish candle. So let's make this green. So the body of the candle should close above the zone. I'm not concerned about wicks closing above, because price might do this. Okay, price might give you a wick like so. Of course, the wick broke this previous high, but in this case, I don't consider it as a higher high because wick is not signifying momentum, it is signifying weakness. All right, so for me to see that, okay, price is also continue in that higher high, I want the body of the candle to close above this zone. So I'm looking for something like this. All right, I want the body of the candle to close, okay? Possibly something like this. Aha. So when this happens, I consider this as a higher high. I hope that is clear enough, guys. Okay, so in this case, I didn't see all of that. So in this case, we saw wicks here. All right, so I would have considered Emmanuel Olukare raised hand. Okay, do you want to say something, Emmanuel? So please unmute yourself and then speak.
Okay, Toby, thank you. Well done. Okay, so yes. I was just going to say, I'm sure you mean Because if we have to consider based on structure and where you draw the horizontal line or bar, right?
Yeah.
And if you have to consider all the weeks. Now, considering from the bullish week, which seems to be the highest high we can consider here. Even if we are to judge by this bullish candle that part of his body close above this resistance, right? Yes, it's still not enough, because judging by the last week, which happened to be, if we are to actually have the highest, yes, it means what you're actually explaining to us does not validate that this uptrend will continue. And as we can see what happened immediately, this bullish candle that closed above this point is actually to trick a lot of people to still want to think this will continue in this uptrend. And as you can see, the lower trend, immediately the trend came back in, though we could call this maybe a retracement. Right. Then we have to wait again and see whether this particular portion is broken before we actually now consider it a continuation of an uptrend. Which almost never happened immediately.
Yeah. So price was playing around, it shifted because this higher low was taken out. Yeah.
Now, even still, can you imagine?
Yeah. Okay. But eventually, when all of this happened, we saw we can see a valid, where's my a valid higher high that happened here. You can see it, right? So this particular structure right now is playing out to what is going on here. So all of this is now in the past, but I understand what you said over here. Let me just zoom in and then clarify for people that might not get it. So because if I get you right, for us to validate that price is still in an uptrend here, we're expecting this candle to close above this zone, isn't it? Because exactly. So that's how we should be. That's how we should be. Okay. So if we know that, all right, if we know that price is not giving us a strong higher high like so, then we want to now start considering a possible retracement, a possible change of trend. Okay, and for price to change its trend over here, you need price to break this higher low like so. Okay, in this case, you know, I'm trying my best as much as possible not to go into smart money concepts, but let's just take it step by step, guys. When you see this, I don't want to jump the gun. We're still going to get to everything that I will talk about. For you to validate that price is in an uptrend, right? This impulse move, the body of the candle has to close above here. Okay. For you to validate the downtrend, like so, the lower low here, the body of the candle has to close here. It's as simple as that. And then when you see that price is in an uptrend, like so, the next thing I want to look for is the immediate support. So there can be several supports. So either here or here, you always find support zones. And you want to wait for price to retrace into a support before you look for buys. Okay, so that can happen at the first support or happen at the second support. All right, so like we said, like we discussed yesterday, support zones can be broken. Okay, it can work, and then it can also be broken. But you find yourself in very interesting more profitable setup if you are using support zones that aligns with an uptrend. Likewise, when you find that when you set a price Hold on. When you see that price is in a downtrend, like so, in a downtrend, you are looking for resistance. Okay, so you want price to correct into a resistance zone. Okay, so when price corrects into resistance, you are looking for sales in a resistance. It's as simple as that. Okay, so that's the message I want to pass across in a nutshell. And I'm saying this because I also know that you might find yourself in environments whereby all of these might not be so clear. I do not want to confuse us by talking about some extra confirmations that we need to do at these different zones. But like I said, let's take it step by step. What I want you to do right now is to identify how the market is moving with what you've learned so far. Where price is in an uptrend, look for how price is reacting at a support zone. Where price is in a downtrend, look for how price is reacting in a resistance zone. Okay, that is the message that I need you to understand. And in the next few weeks of your screen time analysis, that is what I want you to practice. Are we together, guys? Give me some feedback in the chat box, guys, if we are still on the same page. I hope I've not lost anybody. Give me some feedback in the chat box. Give me some feedback in the chat box. I'll try to round off everything by tomorrow. Awesome. So Manuel, thank you. So Joseph understand right here. Good. All right. So let me find more ideal scenarios for us here. So as you can see over here, price is in a downtrend like so. So the downtrend started happening. Look at it. This is a higher low. All right. So downtrend from here. You can see a retracement here. And price doing this. Abi? So now check this out. So let's replay this up until here. So we can see very, very clearly that price is in a what? In a downtrend. And in a downtrend, what are you looking for to sell? We are looking for resistance. All right. So you want to identify areas of resistance in that downtrend. And you can find a resistance zone here. You can find a resistance zone here. So let us mark out both resistance zones. So the last buy candle before the sell happened, because you can see price was going up and then suddenly you can see the direction. That means something pushed price down. That's the resistance. Okay. So let's mark out the zone. For a resistance is the last buy candle before the sell, the last bullish candle before the sell happened. So in this case, I'm interested in the whole candle. So resistance here. In this case as well, the last buy candle, this is another resistance. So now price is currently here. So I'm interested in selling. If price should retrace into this zone, I would like to sell. Or if price should retrace into this zone, I'd like to sell. Okay, so let's see what price did. So we're going to flip this forward now. So this first resistance, you can see how it was violently taken out. So you wouldn't have even possibly taken any entry here because, like I told you yesterday, support and resistance is not a trading strategy. When price gets into a support or resistance zone, you now start look for other confirmations, right? Because you can see how price violently entered the zone. You won't have taken entry, okay? But eventually, price came into the zone. Let me zoom in, and then ultimately that resistance zone held, and then what is price now doing? Price came down and what's formed a lower low here. Oops. So you can see how this resistance zone held, and it was a resistance in a downtrend. In a downtrend, it held very, very swiftly. Okay, so when price, so this is the trend like so. So price has given you another lower low. So when price gives you a lower low, that is a signal that the downtrend wants to continue, right? So you know that you want to be looking for sales in a downtrend. So what do? You look for a resistance zone to sell from. So you're looking for resistance. All right. So over here, price came all the way down from here. You can see price going up like so, and eventually price came down. So a resistance is here. So the easiest and the clearest resistance is this last green candle over here before the sell happens. So let's highlight that whole zone from here like this. So let's see if price should retrace into this zone now. We're looking for sell opportunities to sell this guy. So let's see if price reacted inside the zone. So let's play this forward. Good. So you can see how price tapped into that zone, and then eventually you can see the reaction. Okay. Eventually gave you good amount of move. All right. So we are not talking about confirmations yet, because I want you to see it play out first before we start talking about confirmations, what you should look out for in a support or resistance. Okay. So as you are seeing this, for beginners, I know that it will make sense to you. At least now that you're just getting started, you know what to look out for in an uptrend. You know what to look out for in a downtrend. You know how important a support zone is in an uptrend, and how important a resistance zone is in a downtrend. Okay, so that is what I want you to do. Okay, so I need you to back test like crazy. Okay, back test like crazy. What is back test? So back test is another word for how can I describe back test? Back testing. Okay, so English is failing me right now, but back testing is simply going all the way back and seeing how the market aligned with our concept. All right, so if you go all the way back and then you are spotting a downtrend and how price is reacting at resistance in a downtrend, what it's going to do for you is to help you build your confidence. And it will also help you identify resistance zones easily. It will help you identify support zones easily. All right. So once you get to that level, that point, that you don't need to be using any shape to spot support, to spot resistance, to spot uptrend or downtrend, just know that you've done something right. All right, but what I've just shown you today is the best concept that you want to use to trade in the financial market. In an uptrend, wait for correction to a support before you buy. In a downtrend, wait for correction to a resistance before you sell. Shaking out, right? The people that make the most money in the Forex markets, trust me, they have one of the simplest strategies ever. And I'm not interested in complicating anything for you guys this night. Okay, with time, we will complicate it. But you don't need any sophisticated system to make money in the market. All right. Mr. Money is in hand. Do you want to speak again? So let me unmute yourself and then speak.
Okay, thanks. I was
Yeah.
just going to ask that how easy is back testing as a tool on 10 traders, MT4 and MT5? Because I do know that a lot of MT4 and MT5s, is either they are as EAs or EAs. So it's not that really.
Yes.
Even on Trading View, if you are not using an upgraded account, you can't use backtesting.
Yeah, so thank you for that question. So basically, backtesting that I'm talking about, it has to be like a manual backtesting, and it's just simply let me just simply going all the way back.
I get you now. Like,
yes,
trying to have a previous
like a
look
simulation
at the chart as you are analyzing, maybe on a weekly, monthly, as you are actually coming from top down, just like the strategy of from top to bottom, before you now actually eventually take a trade on the lower time frame, or even before you start actually taking trade at all. So you want to see what had happened previously, what support or what resistance were actually obeyed, or which one were broken, what validation, what liquidation was actually respected, and all of that. Okay.
Exactly. Correct. Okay. Awesome. Thanks so much. Yeah, thank you for your contribution, Mr. Manuel. So guys, we've been here for 2 hours. Do we have any questions? Guys? We would finish up our lesson tomorrow. Okay, I don't want to hold us for too long, except you want me to continue this night. We can continue. But do we have any questions so far? Awesome, Mr. Audu, you're welcome. Solomon and other Simon said, do you mean we should continue? If we should continue, please type in 1. If we should call it a night, type in 2, and then we can continue tomorrow. Okay, so you know what? Because our we've been here for 2 hours. Actually, 2 hours is a lot of time to engage you at once, so that we don't overlook some things while we are learning. Let us continue tomorrow. Tomorrow we'll be fresh again, and then you would also have enough time to go through everything that you've learned today. So tomorrow we'll finish up, don't worry. So please let us continue tomorrow. Okay, so tomorrow, very importantly, I would also like to talk about a very, very important aspect of trading, which is risk management. Okay, which is something that, you know, even some professional traders don't really understand properly yet. All right, so if you have good risk management, even if you are a total beginner, I don't see you blowing any accounts. All right, if you have risk management, or you should not blow an account. Okay, so please, you want to be in tomorrow's training, and then we'll go in depth into risk management. And then I'll also talk briefly about a platform called TradingView. All right, so you can use TradingView and MT5 for your charting analysis. Okay, so it's good to introduce you to those platforms so that you pick what works best for you. Okay, so someone is asking a question, Solomon, how do you draw the rectangle supported? Okay, it's very, very simple. So I'm on a platform called TradingView right now. So TradingView is a free charting platform. So you want to go to the website and create your account. It's free to use. Go to www.tradingview.com. So when you go to tradingview.com, you see the option to register and create a free account. So eventually you'll be led, you see how you can get access to the chart. So once you're on the chart like this, on the left-hand side, you see geometric, where is it? Here, geometric shapes. So I use a rectangle. So I select the rectangle tool. When you select it, you can draw a rectangle as you wish. You can change the colors, anything you want to do, you're fine. So that's how we use rectangle. It's a tool. It's a tool on TradingView. It is on TradingView. It is also on MT5. Let me show you the rectangle on MT5. All right, so MT5, at the very, very top here, you see draw rectangle. So when you click on draw rectangle, you can draw the rectangle. You can see it on any place. Okay, you can also change the colors as you wish as well. Okay, is that clear, Solomon? Joseph, Mark Ajayi, risk management, how to calculate your stop loss exactly. So Mr. Joseph, all of that we'll talk about tomorrow. Okay, so please don't miss tomorrow's session. Aldo said, I made my profits in buying than selling. My philosophy is simple. A bull is stronger than a bear. Well, it depends. It depends on the commodity. It depends on the pair that you are trading. There are some pairs that it makes sense to only sell, and then there are some pairs of commodity that it makes sense to only buy. All right. So, but trade whatever works for you. Okay. So if it is working for you, then only look for buys and then you buy. So Solomon Musa, I should do it again on MT5. So this is your MT5 platform. You see a tab at the very top here. At the top here, okay, you see this. You see the rectangle. If it's not there, you see some tools already on this tab. So just right click, you see customize, and then you can add any tool you want to the tab or delete them. Okay, you can see these are available buttons and selected. All right, so anything that you want to add, for example, if I want to add this trend line by angle, I'll click on this trend line by angle and then I click on insert. When I insert, you can see is now here. So by default, maybe the rectangle is not going to be displayed here, but I added it myself. So once you've added it, you click on it, you can see it will be highlighted, and then you draw it wherever you want to draw it. Okay. You can change the colors, just right click on properties of rectangle, style, under style, you change color to whatever. So let's say yellow. Fine. Okay. So guys, let me thank everybody for showing tonight. Thank you for staying to the end. We'll be here for 2 hours, and then you've been online for 2 hours. All right, so I want to salute everybody for the commitments that you've shown towards this bootcamp, this masterclass. Okay, so tomorrow we are going to round up our session. please, if you have any questions, come to class with your questions tomorrow, and then I'm going to answer your questions. Okay, so let me take the last question. Mr. Manuel was the question again. Or contribute.
Thanks,
So
Toby.
yes,
Okay, I was just going to ask about funded traders again.
Yeah.
And can one actually join in at any time, either at the beginning, middle, or at ending of a month?
yes, at any time.
Okay, all
anytime.
right. Well, I just wanted to know whether there is actually a particular calculated calendar to it.
No, at any time.
Okay, all right. Okay, thank
right.
you.
You're welcome. All right, guys. So I'll see everybody tomorrow. Let's have a remarkable night's rest. God bless you. Bye-bye.